Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ed Carson here with a breakdown of the action in today's session, where we saw a brutal sell-off on a hawkish speech from Fed Chair Jay Powell.
Yeah, the breakdown is right. It felt like there was a lot of selling today. I want to revisit a stock we looked at yesterday. It looked a lot better. Axcelis. We also want to look at Arista Networks and NIO.
All right, we'll check in on those charts, but first let's take a look at the major indexes. A lot of damage done today. The NASDAQ down almost 4%, followed by the S&P 500 and Russell 2000, both down about 3.4% today. The Dow off by 3%, or the equivalent of 1,000 points. So a lot of red on the screens, Ed, which, it felt like we were at a pretty key inflection point with this market pullback in a new uptrend right around that 21-day line, and saw a lot of constructive action yesterday, a lot of positive signals and potential buy points from leading stocks, but dreams were crushed today in many ways with the bearish action that we saw. What do you think?
Yeah, I mean, we started the week at first, we were pulling back and we came below the 21-day line and we tested it a little bit. Then all the major indexes were back above it on Thursday. Yeah, and as you said, a lot of stocks showed strong action. It was looking pretty good in that regard. A lot of stocks had formed handles, but we didn't really know. The reason, we really hadn't seen that. And then Powell came in. Honestly, what he said wasn't really that much of a surprise. He talked about there's long-term inflation pressures and we're not going to let it get out of hand. We're going to keep rates high for longer. So you could have spun a scenario where the market rallied on that because everybody knew what was coming. But obviously that's not how the market reacted. This is why we're always looking, well, it's how the market reacts. It's not the news. Big drop. The NASDAQ, all these indexes, all of a sudden the 50-day line is in play. And what's interesting is that the 50-day line, it coincides with some big numbers for a lot of them. There's 12,000 for the NASDAQ, the Dow and S&P have some big round numbers as well. So you could see the market pull back to that. We don't know. We don't know if we're going to have, was this all just a bear market rally? That was a question we had even when things were going right.
Right.
And I think investors need to take stock in that. It doesn't mean we're going to that. We could have a second-day reaction. We could bounce back from this. But this was really negative action.
Right. And even with the positive signals that we were seeing yesterday, like you said, there were reasons to be skeptical. We're still below the 200-day line, and that's right where the S&P 500 hit resistance. And with the uncertainty that a market reaction can be on anything related to the Fed, it seemed like it wasn't really a time to place those big bets in either direction, but to just wait and see how things shook out. Is there any concern, Ed, about what a day two reaction might be? It seems like with the big drop today, further weakness could be expected. But what do you think we can anticipate in the coming week?
Well, I mean, I think we're certainly going to have sort of a shift more towards fear from greed. I think yesterday's action was a little bit like everybody was really excited. They didn't want to miss out. There was a bit of FOMO, and there was a lot of positive action. There were reasons to buy certainly buy individual names, but yeah, we certainly
but reasons to back away today, right? If you're going to be quick to get in, maybe some more aggressive type entries when conditions are like they are, you got to be quick to get out. I mean, that's what we were doing with Leaderboard today, I know, and just what we were talking about on IBD Live.
Yeah, and absolutely. I mean, so I don't know if there'll be a day two reaction. I mean, I didn't know what kind of reaction we're going to have. I didn't expect this, but then obviously nobody really, I mean, not nobody, but not many people did. Otherwise, they would have gotten out already. But the one thing is that this came out at 7 o'clock in the morning Pacific time, not 11 o'clock. There was more time. So we had volatility intraday. Like there was that big drop, a rebound, and a down. Well, you can imagine if that had come out 2 hours before the close, that we would have sold off or done this or that, and then the next day we have more of a move. So maybe there's less of a need for that day two reaction, but I think everybody will be thinking long and hard over what happened
over the weekend
this week.
Exactly. All right. Well, let's just quickly check in on the Russell 2000 as well, since we looked at the other major indexes. Resistance here at the 200-day line for it too, and the 10-year Treasury yield. Let's also check in on that, up a smidge on Friday, but holding above that 3% mark.
Yeah, I mean, pretty strong gains for the week. Didn't really do much in the last couple of days, but it's been moving up as people anticipate. There's a bit of stronger economic growth. There's anticipation of a stronger for longer Fed, and so yields are coming up. That is an underlying sort of headwind for stocks.
Mm-hmm. And looking at different industry groups or sectors and how they performed, energy, the standout this week. So XLE up about 4.25%, up 3 weeks in a row now. This seems like the group that is weathering the storm the best. What do you think?
I think it's pretty clear. Yeah, this is the way it's got a blue bar, which is pretty much all you need to be one of the leaders after Friday change this week. Yeah, nice action. It's a lot of it's in natural gas, but oil's coming up too. So this is an area that is moving higher, and where as you can sort of see, a lot of stocks look like this, or on the natural gas side, that might be even further. So they may be a little bit in no man's land, but it's definitely an area where you should be paying attention to, looking for new entries along the way.
Exactly. We don't want to chase. So maybe some of those entries have already passed. What about considering taking profits in some of these stocks if you got into them?
Definitely, definitely that has been a good strategy overall, is taking some partial profits. And it's definitely something you could do. If you're worried about that the Fed's going to start cracking down and really clamp on the economy, well, maybe that'll hit oil and natural gas demand, though. But I know that there's plenty of reasons, there's a good story for why oil and gas prices would continue to march higher.
Mm-hmm. Well, we've also been looking at metal and mining stocks. So here's a look at XME. Did get hit along with the broad market today, down about 2.6% for the week, though, up about 3.6%. So still managed a strong gain for the week, even with pretty big hit on Friday. So starting to see some renewed strength in this area of the market.
Yeah. So commodities in general, whereas energy, metals and mining, especially the steel makers, and then you have fertilizers. So there's a number of areas. That's clearly the area that looks strongest right now.
Mm-hmm. And let's also take a look at chip stocks and some other technology-related groups. So an outsized hit here today for chips, even though we did see some promising action on Thursday, albeit in light volume here, but a gain of 3.4% on Thursday, but down 5.6% on Friday. So off by more than 5% for the week, coming down to this key long-term level, once again, that 10-week line.
Yeah, it was pretty impressive on Thursday to have NVIDIA rally on pretty grim, guidance. And then it's just like, and then it was one of the big losers today. It was like, well, wait a second here. So I think that there was some of it might have been some second thoughts. Really, what are how much demand and how these stocks should be. That was part of what was probably driving the market down today.
Mm-hmm. Well, so some disappointing action in chips today, and we'll take a closer look at that in a little bit. But here's the IGV Tech Software ETF. So a broader look at technology and the software sector, down 3.4% today. So also taking a big hit, even though we were starting to see some signs of life in technology and software, Ed.
Yeah, but it's like now the chips and now the software are back to their 50-day line. So we look at the major indexes moving toward it. These big tech groups are coming down to it again.
Mm-hmm. And last but not least, let's take a look at ARKK. So a proxy here for growth stocks, especially the speculative growth part of the market. Huge hit on Friday in some above average volume here for this ETF, down at 6.4%. For the week, off by a little over 4%, but a huge hit on Friday, Ed.
Yeah, big week on Friday, huge sell-off last week. So this one's below the 50-day line. I mean, convincingly, you don't have to, peer at it to see is it below. So you're seeing the growth areas definitely weaken. So while the major indexes look weak, some of the real growth-centric ETFs are showing more weakness. And, a lot of these names, like look how far ARC had come up, and a lot of these names had done bottom fishing things, had gone up 50%, 100%. Well, they've retraced a lot of that. And remember, a lot of former leaders just aren't going to come back, and a few might, but we've seen some big warnings. And so, that bottom fishing rally clearly is over in that regard.
Mm-hmm. Yeah, definitely something to be aware of there. And next, let's take a look at some individual names. ACLS. What a disappointing day for this stock. Huge outside day, reversal, closing at the lows, heavy volume. This was, I think, one of the stocks that was giving us some encouragement about improving conditions just yesterday, with a strong breakout in some really heavy volume here. And this is a strong growth stock on a fundamental perspective, but a huge expectation breaker today.
Yeah, this was really disappointing. It completely wiped out the entire run. So even if you bought it just at the downtrend of that handle, you were the first one to jump on it yesterday, you still would have been down to, at the end of this. This is really negative action. It shows you why buying early is probably better, but this was the risk of buying on Thursday, and it's easy to say than hindsight. Look, if we'd had positive action, this is up 5 points, we're all saying, boy, patting each other on the back. Look, you're so smart for buying it.
Right. Yeah.
But you have to get out or pare back. I mean, it still could bounce. This is a volatile stock. It could bounce. I'm not saying it can't do that. But boy,
not what we wanted to see.
Yeah, there was a lot of stocks like this. Not all of them, but a lot of the stocks that did it. This is just so dramatic, was such a big move, but it was by no means alone.
Yes. All right. And next on our list, we want to take a look at ANET. This is Arista Networks and the computer networking group. It's been working on a big double bottom and pulling back to tack on a handle on that double bottom. And today, with a decline of just shy of 3%, it's now testing the 21-day line. Volume was lighter than average here, though, on today's decline. So maybe this is still a setup worth watching with the strong move that it's had over the last couple of weeks. A handle here is actually constructive, but it'll need to at some point stop going down first for that actionable opportunity to continue to develop here on this chart.
Yeah, that's the thing. This is why we say don't buy at the bottom of handles, because you don't know if the handle's going to work out. So this one may flop completely. And if the market acts negatively, this is going to keep falling almost certainly. As you say, it's formed a handle. There's a more depth to it. Like if you show on a weekly, you can actually see it now because it was been there for a few days, but it really wasn't there. So it doesn't look that, if you look on this, it's like, okay, that seems reasonable. The RS line is at a new high, at least on a weekly basis. So that's pretty positive. So we'll see. Another advantage of these handles is that some of these stocks had run up well beyond moving averages. Well, it's not that far from the 40-week or the 200-day line. So that is an advantage. But yeah, it's got to stop falling. The market's got to stabilize. So this is not one to buy yet. That's for sure.
Yeah, with pre this recent pullback in the market, in whether it's a bear market rally or have to see, only time will tell how this is going to unfold. But like you said, a number of stocks had seen some really strong moves to form the right side of bases, and maybe some trend line entries or something like that. But also, I think putting the action in context of, okay, how far have these stocks run up, how quickly? And so having some sort of pause versus 4 or 5 weeks up in a row, like you said, getting extended over those moving averages, it can be tough to not have that FOMO if you are starting to see stocks that look like they're going to be working, but having that discipline to wait for a pullback, whether it's in the broad market or a move down to a moving average, I think can be something helpful and something that I'm also really trying to continue to look forward, making sure I'm buying close to those moving averages, like you said, Ed.
Yeah, I think that's all good strategy. And and you could just sort of say, we'll see if this works out. And obviously we need a lot of you need the market to be doing better too.
Yeah, we need that to cooperate. All right, well, let's take a look at NIO, an upside reversal for this stock this week. Almost a 5% gain. Looks like volume was a little lighter, but if you go to the daily chart, then you can see some resistance at the 50-day line. Either way, we are seeing a bottoming base now for this stock. And Ed, I mean, in the EV space, there have been other competitors, China peers and otherwise, that have performed better. But we are now seeing a base here form for NIO with earnings due in a couple of weeks. Maybe that's the catalyst.
There's a lot of things that could be happening. One is that a lot of China names moved higher because there's a U.S.-China deal on auditing that should take off the table delisting fears that, we won't delist NIO or Alibaba and such. And there are some names like Pinduoduo and Baidu that had pretty nice action, but they have earnings early next week. So stay away from that, or at least we'll wait for that. Yeah, there's some catalysts. On Sunday, they're going to be releasing a new model. So that's important. I think there's, as the EV market, especially in China, becomes more competitive, having new models is really important. They'll have another one, their third one of the year, in another month. So I think that's one reason they're expanding to Europe in a big way. So we'll see. You could, in theory, see an early entry through a downtrend or some other thing. But, with the 200-day line right there, it seems like you'd want to get, maybe that would be more of an, early entry kind of thing, because, if you get up to, it would just be so close in that situation. So that's something to look at. I have no idea. This could easily flop. I mean, and there's always China news, but I just want to bring it up to attention because some of those China names are doing well. They're putting in stimulus. We're going to be tight. So it could be that China, you can spin a tail where China will do better in the next year because they've been weighed down by so many issues there. Maybe they'll have a better time going forward.
All right. Well, great points there. We'll definitely keep track of it. I know you will be keeping track over the weekend with the new model. You've got a great pulse on the EV industry, Ed, and we always appreciate it. All right. Well, that is it for today, except for probably the most important part, and that's the battle plan for the week ahead. Ed, there were a lot of twists and turns in the market this week. Seemed like midweek there were opportunities to add exposure, but Friday definitely got a lot of signals to back off.
Yeah, a lot of signals, and not just from the indexes, but from the stocks. And so there's probably reasons to be paring exposure, even if it's just cutting back, especially if some recent buys. A lot of them are probably in trouble, sitting on losses. If the market does bounce back and some of these stocks we've been looking at start flashing buy signals, well, you probably still want to be cautious because especially if we come up, we rebound, but we still have to then get to the 200-day line. There's a lot of things there. We still don't know how things are going. And alternatively, some things could get a lot worse. So you have to be ready not only to be cautious, but be ready to scale out even more. I mean, this may be a bear market rally that is now in the process of failing. So there's a lot of things going on. You really have to be nimble the next few days because a lot of things could be happening. You said it was an inflection point. Where that inflection point continues, definitely stay engaged. Build up those watch lists because, we have a couple of good days and all of a sudden people are going to be starting to talk positively again. So a lot to be doing this weekend.
Yeah, I think so too. And for those recent buys, something that sticks with me is something that Scott St. Clair said, and that is, if you wouldn't buy the stock with how it's acting now, why would you want to keep holding it? So maybe things looked really great on Thursday, and maybe there is, if a major sell signal is triggered, a reluctancy to get out of a trade. Man, I was just buying yesterday. Maybe this is a one-off. Going down that line of thinking of, well, maybe the market will come back. Maybe I should keep holding this, but just, take a step back and make that assessment to try to not convince yourself of why you should be in the trades. And we had a great expert this morning speaking in a very much more eloquent way than I can on all of these mental game topics. And that was Jared Tendler. He was so great to have on the show, especially on a very volatile day like today, Ed.
Yeah, it was great. And like getting that mental game. I mean, you want to have these rules. This is the time when you want to have your rules, but you also have to have the mental mindset to be aware of it and then follow those rules. You need to have that. And he had. It was really really interesting. As you say, it was a great time to have him on. I would definitely suggest people to watch that again, or if we have any clips of that. But
Clip
something
coming.
to
Stay tuned.
Keep your mental mind steady. You don't want to get battered again like you might have in the spring. You want to keep your mind fresh. So when things really are better, you have the the mental capacity to take advantage.
Mm-hmm. Well said, Ed. Thank you for that. And thanks everyone for tuning in. We will be back with more on Monday. IEBD Live to kick off the day, investors.com/IEBD Live for all the details there. And we will see you after the close on Monday as well. Have a great weekend, everyone.